Welcome to the Jade Capital Partners Managed Discretionary Accounts introduction presentation. My name is Jamie Clinic. I'm the Managing Director of the company, and I'll run you through a basic introduction to managed discretionary accounts, including a brief example of one of our strategies. To give you an update or an introduction of where we come from, we are a partnership of experienced industry professionals. We established the company 2 years ago. Everybody in the company has a minimum of 15 years industry experience, and we would like to apply, or have been applying, that experience to our customer base. We do trade a number of different products, which we'll go through in the presentation, but the basic concept around the business is to bring our trading experience over many years to our retail customer base. We do also have wholesale customers, but this particular presentation is directed at our retail market. One of the things we like to highlight at Jade Capital Partners is the managed investments. The managed investments can take many forms. It can take the form of a managed fund, which you're probably familiar with your super fund, if you still have an industry managed super fund. But it can also take the guise of a managed account, or in this case a managed discretionary account. We'll go into a little bit of detail about what a managed discretionary account is, but it's when comparing the two with the DIY situation, or do-it-yourself investing, particularly for self-managed super fund trustees, it can be a valuable addition in their asset allocation process. The DIY market is full of information for those who have the time to read everything available to them. For those of you who don't but still want to manage your self-managed super fund, you might also want to look at adding some of the managed investments, such as MDAs or IMAs, to your investment or asset allocation. At Jade Capital Partners, we are a specialist in MDA trading, managed discretionary, and the thing about a managed discretionary account is that it is your money and it's your account. So the security behind the account always remains with the ownership of yourself as the client. But the benefits of an MDA is that you get professionals trading or making investment decisions on your behalf while you still retain full access to your account. And MDAs that we offer cover multiple asset classes, which I'll go to in a minute. And one of the things that we like to highlight to people, we often get asked the question, why do you use derivatives? As I mentioned, that everybody who trades for our company is a market professional, have been trading for many, many years, and the professionals in the market pretty much all use derivatives in one way or another. They can be a very flexible tool. Most hedge funds trade via derivatives, and most CTAs or commodity trading advisors also use the derivatives. Derivatives can take many forms. Essentially, it's the most flexible product when you are trying to spread risk. The product itself is designed to alleviate risk from your traditional asset classes such as shares. What you need to look at when looking at a self or managed investment such as an MDA or an IMA is to get the mix right. Now, what I mean by the mix is a lot of people take on the responsibility of managing their own super, and the first port of call they generally take is the share market. So the do-it-yourself market has exploded over the last few years. There's enormous amounts of information available to the stay-at-home trader or investor, but one thing we'd like to highlight to people, you still have the ability to utilise the services of the professional traders and still maintain the overall direction of your investing. One of the things we do with MDAs, because we're not a managed fund as such, it's an individual account for each client, we base all of our target strategies on absolute return strategies. What that means is we don't benchmark ourselves, we don't claim to outperform, underperform any particular benchmark. We simply believe as a trader and as an investor that you should be targeting the best returns that you could possibly get for each situation. And that's how we approach our investing. We don't believe that having a benchmark that is down 10 or 15%, and we beat that by 2%, it still says that we've lost 8-odd%. So the whole concept behind benchmarking is an anathema to us, and we don't like to do it. Some of the financial product classes that we do trade with, naturally there's securities and equities. We do trade options on futures, options on currencies, options on shares. We have a managed investment scheme, or MDA, managed account scheme rather, for foreign exchange, and we're also in the process of building a long-short equity strategy for using CFD products. And this will be managed by one of our more experienced traders for J Capital Partners. Give you one example of the strategy that we use. So this is a strategy that we have been running for quite some time. Even before the establishment of this company, this is one of the traders, our head trader, Dean Clark. One of the strategies that we use for managing client monies on an MDA basis is the Managed Global Options strategy. The strategy itself targets international commodities, gold, silver and oil. It's a very commodity-based strategy, purely because of the liquidity involved in the contracts that we trade. And by liquidity we mean it's very easy to get in and out of the assets when you're trading. It's a very important part of trading, is to only be trading in liquid markets, or markets that you are able and have the ability to get in and out of relatively quickly. One of the things about this particular strategy is a very simple comparison of historic versus current price volatility. So it is a volatility-based strategy. But essentially, our traders have been trading these products for many years. In this particular strategy, the trader's been trading it for over 10 years. It's a time-based strategy, as with many options strategies, which means that as the end of the expiry period comes around, the time starts to work in the favour of the trader, and is therefore quite a key to the performance of the strategy. So we have a more detailed presentation on that particular strategy, which we've been putting together. But that particular strategy does have a 5-year track record, which is verified independently by a CPA. I'll just quickly put those results up on the screen just to give you an example of how we track on this particular strategy. You can always ask us for more detail on our FX strategy, and like I said, we're building our equity and CFD strategies. These are 5 years worth of audited track records for the Managed Global Options. You can see on this example that we had quite a good year in the last 2 years, and certainly had a really good year over the extreme volatility that we had in the 2008-2009 period. And that's purely just reflective of the volatility in the market and the advantage that our traders took of that situation using this particular strategy. So just on the MDA itself, this is a basic introduction to MDAs. Some of the key points that you should consider or should be aware of when dealing with an MDA. The execution and clearing is not provided by us, it's actually provided by much larger, well-established, robust and largely capital secure companies such as Interactive Brokers. We use them for our futures, options and international markets. Saxo Capital Markets for our CFD, FX and some of the international markets. We like to have at least two choices when we're dealing with our international markets, because the services and range of products that are covered by brokers tends to vary widely. So we like to be able to have the availability of many markets to trade that keeps our traders happy and our clients diversified. For the Australian market, we utilise services of Commonwealth Bank. That's both for our cash services and our Australian equities services. Now, I point these out purely to give you purely so that you see the accounts are not held with us. They're actually held with a large bank or broker. The accounts are all held in your name, and that's the important point after the list of third-party brokers and platforms there. MDA assets are held in the client's name, not J Capital's name. J Capital is simply an advisor to the account that's been put onto the account so that we can help you manage the investments of the company, utilising our extensive trading experience to do so. The performance is the key to the relationship. So if we don't have any performance, or we have a negative performance, there is no fee. So no performance, no fee is our motto, and we like to ensure that we make our clients as much money as possible utilising that history and that experience. As I mentioned, the performance is independently verified by CPA. In this particular strategy's case, for the options, it's P. Sasser, who is a CPA. Having access to the account on a daily, monthly, quarter, yearly, custom range basis, you can print off any statement that you like. You can see what trades are happening on the account. You can see all the adjustments as far as commission, as far as performance, as far as P&L. It is your account. We can't control anything other than the trading on the account. Nobody can control anything other than yourself, who is the only person on the account that can put monies in and out and change things on the account or the fundamentals of the account. And one of the key points about the MDA is that you have that full access, and you do have access to your investment manager. I mean, I'd just like to highlight that point. And I sometimes use the analogy that during the GFC, if your super fund, as some of ours did, dropped by significant amounts, in one of our investors' cases, nearly 30%. If you decided to ring up your industry-managed fund firm and ask to speak to the investment manager who was making those decisions that potentially lost them over 30%, I think you would get short thrift and you wouldn't be able to get through to the person making those decisions. Now, whether that's a good or a bad thing, we don't think so. If somebody's losing you 30% of your investment, you'd certainly want to speak to the person making those decisions. And that's the thing about the MDA. You basically have your own investment manager. So you can ring him up, you can talk to him, you say, right, I can see you're doing this, you're doing that, can you explain your rationale behind that? What should I do? Is this exactly what, is this the platform that we discussed when we were talking about the investment strategy? And the investment manager, you can have a conversation about that. So it's very important to have access to your investment manager so that you can have full control of your investment. Anyway, that's just a brief introduction to Jade Capital Partners. I'm sure you'll have more questions. If you do, please feel free to contact one of our representatives on the email and phone numbers that are on the screen now. Thank you for your time, and I appreciate you listening to our introduction. Many thanks.